Trinidad and Tobago, and welcome to the Bourse Report. Well, yes, it's Carnival, and we may be jumping up, but our money is also jumping up, and we have to keep an eye on it. So today we're taking a look at some financial results of two local gigantic groups. We're talking, of course, about First Citizens Financial Group Holdings as well as Massy Holdings Limited for their respective fiscal year ends or annual year ends ended 2025, September 2025. Now, both groups would have reported improved earnings over their fiscal annual periods. Let's take a look at how they would have performed and what investors might expect in the coming months ahead. Turning firstly to FCGFH, or first, well, the group would have reported an earnings per share figure of $3.93 per share, which was a 3.7% improvement from the $3.79 reported in that prior comparable period of fiscal 2024. Now, driving that performance was a modest increase in net interest income, up 1.8% from $2.06 billion to just about $2.1 billion. Total net revenues increased 5.1% from $2.7 billion to just about $2.87 billion. Operating profits up a very commendable 8% from $1.23 billion to just about $1.33 billion, and profit after taxes improving that 3.4% from just under $957 million to just about 990 odd million TT dollars. So certainly good reading for FCG or First investors, fairly resilient in what can be described as a very dynamic banking market. When we looked at First Citizens profit before tax by segment, we can see that there were some notable changes, most notably a 53% increase in their retail banking segment, PBT, increasing from 293 odd million to just about 450 million in that bluish segment. We can see corporate banking over the decline just about 16 to 17% from 762 million to just about $635 million there in that greenish segment. And treasury and investment banking also declined from 617 million to just about 596 million, with a small decline as well in trustee and asset management profit before tax contribution from 59 to 56 million. When we take a look at asset composition and the trends of First Citizens' balance sheet on a consolidated basis, we can see that there has been consistent and notable growth since fiscal 2023, moving from about 45 billion in total to just over 49 billion in the most recently concluded fiscal period. Most notably, we can see that loans to customers would have grown significantly year over year from 21.2 billion in that purple segment to 23.8 billion, a roughly 12% odd increase. Over the comparable years, there were not many significant changes otherwise in terms of investments, hovering around that $16 billion mark, and cash and cash resources at around that $7 to $7.7 billion figure. Now, from a valuation perspective and a cash flow perspective for investors, it seems like banking stocks are the place to be for equity investors, with the sector average investment yield at around 5.2%. First Citizens offering actually the highest dividend yield across the banking sector at 6.4%, and of course offering investors quarterly dividends, which is quite an attractive proposition to income-oriented investors. So at that price of $89, First Citizens is trading at that price earnings ratio of about 9.9 times, which is slightly above the sector average of 9.3 times, and again offering a fairly generous dividend yield of 6.4% compared to that sector average of about 5.2%. So with that resilient revenue growth in mind, improving earnings, what can be described objectively as an attractive dividend yield, but keeping an eye on certain market uncertainties, of course, with the new proposed asset levy coming into force and how that could impact earnings and cash flows over the next coming quarters. Bourse is maintaining an overweight rating on First Citizens for the time being with a watch outlook. Turning very quickly to Massy, for its fiscal period ended September 2025, the group would have reported earnings per share of 36.5 cents, which was a 9.3% increase from the 33.4 cents per share recorded in that prior comparable period. Now, interestingly, EPS from continuing operations would have increased a whopping 14.2% from 31.5 cents in that prior comparable period to just under 36 cents in the most recently concluded period. Driving this performance was revenue from continuing operations up 3.1% from 15.3 billion to 15.8 billion, with operating profits after finance costs improving 10.1% rather from 1.2 billion to just about $1.34 billion, ultimately Profits attributable to equity holders improved at 9.3% from $660 to $722 million. When we look at profit before tax contributions by segment for Massy over the comparable periods, well, modest growth. We can see integrated retail would have grown in terms of PBT contributions just about 4% from 662 to 689 million year over year. Gas products actually up 8% from 356 million to just about 385 million. This was partially offset by some declines in the motors and machines and financial services segment. Motors and machines falling about 18% from 228 to 186 million, with financial services declining just about 9% from 75 million to 68 million. So a mixed bag in terms of segment performance, but overall, Massy's PBT continued to grow. And when we take a look, importantly, at Massy's geographical composition, we can see some also very important trends for investors who are looking for built-in diversification in terms of regional exposure and regional market concentration. We can see, for example, Trinidad and Tobago in fiscal 2022 accounted for about 46% of Massy's profit before tax. That has gradually come down to about 34%, whereas Guyana, for example, have grown from 22% in fiscal 2022 to about 27% in fiscal 2025, with some increase also in the Barbados and Eastern Caribbean segment from 20% in fiscal 2022 to 24% in the most recently concluded period of 2025. So again, the key takeaway here for investors is that regional and market diversification continues to grow, and importantly, in what can be considered hard currency generating jurisdictions. So at a price of $3.32 per share, Massy is trading at a price earnings ratio of 9.1 times, which is below the sector average of 11 times, and offers investors fairly attractive dividend yield of about 5.3%, which compares favorably to that sector average of the conglomerates of about 4.1%. So with that modest revenue growth in mind, higher profit margins, the continued geographical diversification, but of course some market and policy uncertainties, again, related to some fiscal policies which may take force in the Trinidad and Tobago jurisdiction, which could impact consumer demand, versus maintaining a market weight rating on Massy for the time being with a watch outlook. But that's it for this week's edition. For more information, you can give us a call at 226-8773. or email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago of Trinidad Guardian newspaper. So until next time, stay safe, happy investing, enjoy your carnival, and we'll see you again on the Bourse Report.